Hi everyone, my name is Piterpakulski. Today we will continue talking about acquisition financial model. So in this model we are describing so we buy the house or an apartment and we are gonna be the landlords. So we will have the rent. The rent will be the source of revenue in our project. So at the previous videos we've specified different types of inputs. So these inputs are colored with blue, like this. So we have 10-year horizon for our project. Here we specify the price that we buy of a house or an apartment. Here we specify the amount of down payment. Then we specify the amount of loan, the term of loan that we are taking, if we do take. This is the interest rate of the loan. This is the grace period for principal payments of the loan. This is the grace period for interest payments of the loan. This is the monthly revenue that we get. Here we specify month and year when we start the deal. When we buy the house or an apartment. Then we specify the cycle for revenue specification. So this is the time to the first deal after we buy the house. This is the contract term when we have the revenue. So and then we assume that after 24 months of revenues our contract will be over and we need to take 2 months to find a new tenant, so we can specify all these parameters. They will affect the revenue generating algorithm. Then we move to, so then we get the revenues, and here we inflate the rent price. This is the year of projections. This is the inflation percentage. Then we specify different operating costs. Here we name them, and if we do have any seasonality in these types of costs, we can place this seasonality inside the typical year. Then we put these expenses, operating expenses, inside the timeline. So all these things are automized. Then we specify when operating costs occur after the operating costs payment. Let me just correct. So here we specify the amount of months. So we have the moment when we buy the house, and then we count, let's say for example 2 months when we start having operating expenses. So this is very important because operating expenses can happen earlier then we have the revenues. So for example, the revenues we have in January, but operating expenses occur in November 2023. This means that we may have some operating losses that we may also take into account. And today, so we have different operating costs starting with this moment. So we can, by the way, easily displace the project. We can start the project, for example, in June. We can see how the revenues displaced, operating cost displaced, and now we need to add inflation to these operating costs. So if you find this video valuable, you may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. And I will be giving at the end screen of this video, I will be giving the link to the playlist where the whole process of creation of this financial model will be placed. And when this model will be done, in the description of this video I will be giving all the links on the process of creation as well, so you may follow video by video to see how the financial model is born. So first of all, we need to create the new block of inputs for, let's say, OPEX inflation coefficients. So this will be a new block of inputs. So here I will place the year. I will take the years from the previous table of inflation, and I will place here inflation rate, inflation coefficient, and let's assume that we will have different inflation ratios for different operating cost items. So for example, for this operating cost we may have these values, for example, of inflation. For this operating cost we may have another values for inflation, and we can specify in the table that I will be creating, we can specify different inflation values, and then we will place them inside the timeline. So how we can do that? So here I will place the name of operating cost item. So this will be the inputs. So I'm coloring this area with specific color which goes with all our inputs. Let's place here some numbers. Whoops, let's stop it. So this will be operating cost 1, 2. Let me copy these values here. 2, 3, 4, 5, and 6. So I'm placing the names of our operating cost items here: 3, 4, 5, and 6. So now we need to write a very simple formula. So the formula will be so this will be the value of coefficient. For this cell, the formula will be like this. So here we have our coefficient for the inflation. So I'm taking this value, multiply it on this value 1 plus this value, then I'm pressing enter. Then I'm copying these values here, the formulas. What I can do later, I will be using VLOOKUP function, so I will need to place the column numbers here to simplify the formula that I will be writing later. So I'll be just putting the column numbers on the top. And if we look here, so operating expenses, just a second, let me find this rent coefficient per month, years of project. Yeah, so we need this. So we have the years of projects. This is the year number 1, then this is the year number 2. But this line we've created for the revenues. So this line, let me color it. So this line starts when revenues occurs, but in our project we have operating expenses. Starting prior the revenues. So we need to add this first year coefficient, inflation coefficient, earlier. So we need to start this number not from here, but from here, because operating expenses start earlier. So how will we do that? So we will create a new line here. So OPEX years, and here we will write so operating expenses payments. We have this line, and we will write a formula. So if this value is equals to 0, then we put 1. We will use if and end function. If and. So if this value equals to 1 and so OPEX, operating expenses, is 1 and years are 0, then we will be using year number 1. In other cases, we will be using this number. Let me close the brackets. So what we have now, we have our operating activities. Year number 1 starts from August, like our operating expenses happen, and then when we have the year number 2, we have year number 2, so if operating expenses happen earlier than revenues, then we do have operating the right coefficients for OPEX. let me highlight it with this color. I will use the white color for this. Now we will need this line to assign all these coefficients. So I will create a new table. Let's say OPEX inflation coefficients in timeline. So here we will place operating cost item. Here we will place the list of operating expenses. And now we will write a formula for this coefficient. We will use VLOOKUP function. So we will be searching for so we're searching by the way, let's get back here. So this is the formula. Let's extrapolate it to the left. Now we're getting back. So VLOOKUP, we are searching for this value. We are freezing the line. We are searching for this value inside this table. Inside this table we will need, in this case, the column number 3. So we will take this value, we will need the column number 3, and we will need exact match, and then we are closing the brackets. If error, we will place 0, then the table we are completely freezing. So this will be the coefficient for inflation for operating cost item 1. Now we are copying this formula here. This time we will need column number 5. So this time we will need the column number 5. Then we are copying this formula here. Now we need the column number 7 for operating cost item 3. So we will be searching for this, we will be pasting these values of inflation coefficient depending on the year. So then we are pressing enter, doing this, then copying the formula, then we are going forward. number 4, 9, 11, and 12, and 13, sorry. Now I will extrapolate this formula to the right. So now we have our inflation coefficient, different inflation coefficients inside the timeline. So for example, if I have 8, 7, 6, 7, 8, 9, so another coefficients here, so we can go, for example, here. Here we can see the difference in coefficients comparing to these lines. So we can now specify any inflation coefficients to each operating cost item, and the expenses, operating expenses, will grow differently among each other. Now what we will do, OPEX, this will be $1 per month. So here will be the list of our operating expenses. And now we are doing very simple exercise. We're just multiplying these coefficients. We're just multiplying these coefficients on the basic values of non-inflated expenses that we already created in the previous video. So I'm just multiplying on this cell. Now I'm extrapolating this formula to the bottom and to the right. So now we can see, so this is non-inflated value, this is inflated, so we may play with the inflation rates the way we want for each type of operating expenses. Now we can highlight these lines in red because they will go to the cash flow statement later. So I hope you enjoyed this video. You may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. At the end screen of this video I will be giving the link to the playlist where all these tutorials will be placed. And when the whole financial model will be ready, I will be giving all the links on creation of this financial model from scratch in the description of this video as well. So you may go video by video, lesson by lesson to create the same model that I'm creating. So I hope this video was useful for you. Give us a like, subscribe. See you guys in next videos. Thank you and bye.